became ex-president.
Good morning, everybody. I'm Ed Parcaut with Mike Kelly, and it's Real Estate Jerky Daily.
Yeah, it is Monday.
And it looks like we still have issues with Instagram.
Yeah. You know what makes you tired?
When you get older.
Three granddaughters
No, it's going.
that are here for 2 weeks. They are 10 and 12.
Yeah.
And oh my gosh, they wear you out.
Yes, they do.
Come on, what can we do now, Grandpa? I can go sit over here in the corner.
Here's your iPad.
Exactly. But I don't want to do that either.
Why?
I think they spend enough time on their iPad when they're at their parents' house. You know, it's easy to crawl over in the corner and just, you guys, I'm going to be quiet over here. Just leave me alone. What are you doing? Growing a farm.
All right. So, I don't know if you saw this, but no tax on home sales act. Have you heard of this?
No. Yeah. How did I not hear that?
I don't know. Georgia. Oh, my mind.
Wow.
Congresswoman Marjorie Taylor Greene.
Oh, geez.
She's another name in there. Has proposed a no tax on home sales act, which would end an unfair penalty on hard-earned equity. This bill would eliminate the federal capital gains tax on the sale of primary residence. Currently, homeowners must pay capital gains tax on sale of proceeds that exceed $250,000. You were talking about this before for single filers and $500,000 for joint filers. This bill would not benefit real estate investors or flippers, but rather everyday homeowners whom the tax is never meant to apply to originally.
Really?
Yeah. When the capital gains tax exclusion was set in 1997, the median home price was only $145,000, and today the figures climbed well over $360,000. I'd say more like $450,000, $500,000.
Right,
but,
average.
Who am I?
Yeah.
With the surge in home values, 34% of homeowners would exceed the exclusion limit and have to pay capital gain taxes. She argues that making it easier for everyday homeowners to sell their homes without losing a portion of their profits to the IRS would help ease housing shortages and unlock inventory. I believe that because I have a client right now who actually bought in the Bay Area, 15 years ago because he's a PA, and he works over here now. And now they're thinking about buying over here, and the house is worth $1.4 million, but they bought it for $500,000. What time?
Yeah.
So,
that's a lot.
Yeah. So if you add 500 to 500, that's $1 million. So they pay capital gains on over 400,000 at 22,000 per 100,000. That would be almost, what's 4 times that? Yeah.
It's robbery. It's absolute robbery. And the states in the United States, they understand that. Quit spending.
Well, it shouldn't be for people who live in their house and they're trying to move up.
Yeah.
I understand the flippers and the other people should pay it. That's because they're making profits.
Right.
People who are living in their home, the plan is for future, equity and use it for their family, not for.
Well, I can't tell you how many older couples I have that are just like, well, it looks like with the capital gains the way it is, there's no way we can not stay here until we die. So it would be fun for them to be able to sell and be able to use that money for something else, maybe enjoy their life.
Yeah, like it's supposed to be.
Yeah,
because that way they can downsize and put it somewhere and not have to give away $100,000 on average to the government for no reason.
Exactly.
I'm going to get into some other stuff, but
okay.
Everybody's focused on what's coming out tomorrow and Wednesday, which is the CPI, Consumer Price Index, and the Producer Price Index. That'll tell us where inflation is. Is there something on there?
Nope.
Why are you poking at it?
There was light shining on it. I was going, oh, where'd that come from?
Okay.
I'm easily amused.
You got mushrooms.
I'm still drunk from Saturday.
Yeah. So this Tuesday, Consumer Price Index. Wednesday, mortgage applications, Producer Price Index, industrial production, Facebook. Thursday, retail sales, initial jobless claims, and Friday's housing starts.
What's Facebook?
Facebook. I mean,
phase. Oh, phase.
Facebook.
Okay.
Did I say Facebook?
Fed.
Beige.
Gotcha.
Like the color you normally wear here all the time.
I understand now.
Beige.
Yeah. It's black today.
Normally it's beige.
It is beige.
And I have white on, which is messing with my camera's lighting.
Yeah,
it is. Lighting. Yeah, what are you going to do?
Reflecting.
Well, it just messes it up to where I'm darker.
I got my lights on to make me look like I have a tan and I'm not dead.
Yeah. So housing inventory.
Okay.
We went down 6,317 last week.
Wow.
Weekly active listings fell from 853,180 to 846,833. A rare decline in midsummer. No, we normally decline in the July 4th. We just had a huge 22,000 the week before last, which I think kind of messed it up. People did it early. I think the fact that 4th of July was on a Friday, not in the middle of the week or the beginning, is why that happened. That's just me. I think so.
Well,
look at this. Why the dip? Blame July 4th timing. I guess I should read ahead.
Yeah.
This tells me I do know what I'm talking about. New listings take the hit. Yeah, but the big thing we're seeing right now is price cuts.
Yep.
40.7% of homes had price cuts, a healthy sign of price negotiation in a tight, affordable environment. I think it's just people overpriced the home to begin with.
Well, yeah,
on average.
the crazy thing is the just like you said, seasonal. And all of a sudden, the last 2 weeks, things have kind of gone crazy. I'm looking at an AI article here that says California's real estate market is currently experiencing a mix of trends. And boy, is that completely true. While some areas are seeing price drops and increased inventory, others remain competitive with rising prices. So, but like in Modesto, I have those buyers who were liars. They back out. Yeah, cash buyers who were liars who back out 2 days prior to close of escrow. Under the dumbest reason in the entire world. And yeah, I think I messed up. I trusted them way too much. And we were in escrow at $850. Now we're at $799 and we've done all the work. It's a fantastic property. And with an acceptable purchase price, we'll offer $10,000 for a flooring credit. So, and then we're priced at $799. That's 501 Hamden Lane in Northgate. Yeah, that's a great buy.
So back to that kind of situation. Yeah. No, what I'm saying is it's really important to make sure that it closes the first time. Yep. And the reason I'm saying that is because I have some people right now who are in a daisy chain situation.
Right.
And the buyers of their home, I'm not going to say who it is, but it has something to do with the rate, is not, I don't want to say not being honest, but just is really messed up the whole thing.
Yeah.
And now we're 2 weeks past closing, right? Is what we're going to be. So I pay for the first week of extensions.
The float.
Yeah, right. The extension. And then the second week was almost $1,600.
Oh my God.
Yes. And so now they're going to take that away from what their credits are giving the buyer that's buying their place because they need to make it up for their house. They don't have this extra money.
Right.
And they were tight to begin with, and the numbers and every AUS. So we're getting ready to close. This is how weird AUS is. We're getting ready to close on this thing. And so we're doing the final AUS, which you do refer.
Oh no.
Yes. And couldn't get it out for adding $40,000. You name it. We couldn't. And then this one junior underwriter said, when she's underwriter too, I call them junior underwriters. They don't like it. She's like, just adjust the term. I'm like, what? She's like, yeah, just take it to like 27 years. I'm like, does that work? She's like, it's worked before. She's like, whatever you feel comfortable with. I can't tell you what to do. You can try 29, 28, whatever. Yeah. I just did 27. It raised their payment about $75.
Yeah.
Guess what? Right out. Yeah, no problem. So if you're having, I'm just throwing out, if you're having issues with AUS, all of a sudden doing that, just adjust the term. I had no idea. And I've been doing this for 20 some years.
It's risk related, right?
It is, which is weird.
Yeah, that is weird.
Yeah, that part of it. But adding more reserves or paying off all the debt, which you would think is not risk, would help with the risk, didn't work. But just adjusting the term.
What I'm getting at, song about that.
Yeah, what I'm getting at is when you do with this, is it can mess with the deal. Now, so you got these people that can't buy, this person can't buy, and now everybody doesn't get their house.
Yeah.
Make sure that the people you put into contract are underwritten ahead of time.
Yep. Yeah.
Because even though we do that, you still can have an issue like we just did.
And when they say they're cash and they show you all the proof of being able to close that escrow, it doesn't mean they want to use that cash. And they were hoping on something else to happen.
Like what?
And insurance claim to come in on time. And I think they used that as the way to get out, saying, well, there's too much repairs here, even though they'd already agreed to the seller's response to their request. Just assholes.
I'm sorry.
That's all I can say.
Yeah, I dealt with one.
And for the most part, through the years, all my transactions have been so smooth. I hate that I double end it, and I can't get along with myself.
The problem is like Courtney said out of Las Vegas, a lot of the deals now are held together with bubble gum and duct tape or string, whatever you want to call it.
Wire, yeah.
And he's like, you don't know if they're going to close till the last minute they close because there's all these different issues. And it's because we're pushing numbers. Yeah. Right, we're really pushing people's numbers to get them in the houses. You're FHA's over 50%, DTI, which who wants to really be there? But that's what it takes to get in these houses, and so you're really pushing the numbers.
Yeah.
See if I think there's one more thing I wanted to go over. They're talking about how the new economy that by 2027, over 86.5 million Americans will be freelancers. At work.
Freelancers.
So, that means they're not going to have a company that they work for. They're not going to be a W-2 lending isn't going to work for them. So you're going to have to do stuff like bank statement loans, a P&L, all those things that we do now for people that is going to come into play more and more. So we're going to see more business owners, bottom line, what we're seeing.
Yeah.
We do a lot of DSCR loans now, which has all to do with just the rent of the property. I did a lot.
DSCR, that sounds like a camera.
Well, what it is has to do with debt service, basically making sure that the property can service the debt by the rents. Right, whatever they are, whether it's an Airbnb or whatever, and so I've done a ton of those in other states and other places that people are buying, and it's an easy loan to do. You can do it in 33 different states if you're not approved in those states.
Yeah,
which is great. Wow. So I'm just saying that I did not know it was going to be that many people. So that's going to start affecting more things.
Absolutely.
Going forward.
Yeah.
And you need to really understand. So what you need to do is talk to a client when they come to you and say, I want to buy a house. What do you do for a living? Well, I work for Fiverr. All right, we really need to get you with a loan officer to find out because you're not a W-2 employee anymore. Yes, I am. I own it. Just like the other day when somebody said, you're self-employed. No, I'm not. I'm not self-employed. I own the corporation that employs me.
Yeah. Yeah. Self-employed. Yeah.
Okay.
It doesn't matter how it's semantics. It doesn't matter how you phrase it.
It still comes across the company. Thing. I'm a shareholder in the company.
Well, yeah. And how many people are shareholders? Well,
2.
One.
2.
Me and my wife.
Ex-wife.
Soon to be.
No, I don't know.
Yeah.
But I'm just saying you have to understand younger people don't understand any of this stuff.
Yeah.
And it was never a problem before, but now you really have to talk to people about it.
Uh-oh.
What?
There's an article right here that says nobody in California is buying homes.
Yeah, but not in certain places.
Do you think it's true?
No, people are. Somebody is. Not nobody, somebody. You're a somebody today.
I'm a somebody.
Yeah.
Oh, it doesn't say nobody. It says no one.
All right, so not one. So more than one.
Yeah.
Yeah. Not one, no one.
Well, no one.
Yeah, a lot more than one.
All right.
Well, in certain areas, I think things are slowed down, and that's, again, seasonal thing. We're messed up. Let's see what we are in a couple weeks.
Summer, usually you're picking up a little bit. You're got a little more activity. Last 2 weeks has been very strange. So, what is today? What's today? Today's the 14th. Monday. So, let's find out what happens tomorrow because you've been saying you thought things were going to change after 7:15. Right? Huh? Yes.
What?
Oh, I got to go in for another sleep study on the 16th.
Are you serious?
Yeah, they're gonna try to fit the BiPAP mask to me. I wonder if I'm going to have more energy and I'm going to be able to be more active and energetic and fun and frivolous and lose 75 pounds. I started the year needing to lose 35 pounds. I only have 50 more to go.
All right, let's move on.
All right.
Thanks for being here. Appreciate you.
It was fun.
I was just reading something from the escrow officer.
Tell me.
That we're missing something from a CDA. Well, we're missing it because you haven't received the money yet, according to us.
Okay.
Right?
Yep.
Because you never gave us the statement that
the settlement statement,
the receipt of it.
Oh. Yeah.
We have the receipt.
We're missing it because we didn't get it from you.
Yeah, exactly.
So that's why
I know you have it because I was told by the client he dropped off, but we never received that receipt from you. Can you send it to us? Yeah, what are you going to do?
I don't know.
Yeah, me neither. All right.
Hey, make it a great day. I won't be here tomorrow, but I will be here Wednesday, Thursday, Friday. So,
it'll be a faster meeting tomorrow. Just the facts.
It's the facts, man.
Because tomorrow's CPI, so I'll be talking about how well the market's doing because of it came in lower or how bad the market's doing because it came in higher.
I'm going to wear my ear pod in one ear so I can listen while we're doing a sales meeting.
Well, you're only there because you have property.
Yeah, true. That are sitting on the market.
All right,
All right,
everybody,
kids, make it a great day.
We'll talk to you tomorrow.
Oh, remember, go out there and buy something.
Yes, please do.
Bye.
Bye.